Yes, hello, my dear friends. A very good evening and a warm welcome to our CA Inter students who are going to write the exam in this September 2025 attempt. Friends, this particular video has been set up specifically to talk about the amendments in GST perspective which are applicable for September 2025 attempt. Now, the point is very clear that for September 2025, compared to your May 2025, when it comes to GST, it is absolutely the same because in GST, there are not, when it comes to income tax, it is absolutely the same because in income tax, there are no changes for September as compared to May 2025. But let me tell you, in GST, compared to May 2025, for September 2025, there are few small extra amendments which we need to learn. Now, this video is for two set of students. Number one, who are going to write the exam for the first time in September 2025 attempt. Second is that category of student who already wrote the exam in May 2025, but they are appearing again because the luck did not favor. They are writing once again now in September 2025. So I want to cover up some interesting amendments which are specifically applicable from September 2025 attempt onwards for CA Inter GST. So Shiva Teja from IndigoLearn, your tax friend, is ready to help you out in sorting out these amendments and ensure that we understand them very clearly from a very logical and conceptual standpoint so that we become perfect with them. Come on, my dear friends, without any delay, let me share the screen, discuss the amendments, and become perfect. Clear? Thank you. Student is asking in chat box, is this video about income tax? No. This video is specifically for GST, my dear friends, because in income tax for May 2025 and September 2025, it is one and the same. This is specifically for GST only, because income tax is one and the same. Done. Let me share the screen. Done. I'm sure the screen is visible for all of you. This particular document PDF also I will attach in the description box. Once the session is done, I will add it to the description box. You can download from there. See now. We are talking about specifically CA Inter statutory update for September 2025. Few interesting concepts and provisions we are going to discuss, my dear friends. So this is specifically for September 2025 attempt, my dear friends. Please see that. First, some interesting amendments in supply topic. As we all know, this concept of supply is dealt by Section 7, and we have discussed about Schedule 1, Schedule 2, and Schedule 3 during our lectures, wherein Schedule 1 talks about transactions regarded as supply, even though there is no consideration. There is no consideration, but still it is regarded as supply, is dealt by Schedule 1. Schedule 2 talks about what are regarded as supply of goods, what are regarded as supply of services. And finally, Schedule 3 talks about transactions which are neither regarded as supply of goods nor regarded as supply of services. That concept is dealt by Schedule 3, my dear friends. Correct, right? Come on, see now. Now, there are some new points which are introduced in Schedule 3. What is that Schedule 3? Transactions which are neither regarded as supply of goods nor regarded as supply of service. When it is neither supply of goods and when it is neither supply of service, that means very clearly what is the answer? GST will not apply. So there are two interesting amendments, extra points they have brought in. Please see that. Activity of apportionment of co-insurance premium by the lead insurer to the co-insurer for the insurance services which are jointly supplied by lead insurer and co-insurer to the insured in co-insurance agreement. That is neither regarded as supply of goods nor regarded as supply of service. What does that mean? Let me give a small example. So let's say, for example, there is one person, Mr. A, and let's say there is one company known as New India Assurance, and there's another company known as Tata. There are two insurance companies which are acting as a co-insurer for a particular insurance policy which is taken by Mr. X. And let's say, for example, Tata is the lead insurer. Tata is what, my dear friends? Lead insurer. That means, let's say for example, total premium is, let us say, 10 lakh rupees. When total premium is 10 lakhs, and let's say for example, 60%, 6 lakhs is taken by Tata, 4 lakhs is taken by New India Assurance. There is a risk mitigation which is being done by Tata and New India Assurance, where they're acting as a co-insurer. In that case, they have clarified that the activity of apportionment is neither regarded as supply of goods nor regarded as supply of service. But there is one condition, that the lead insurer, in our example, who is the lead insurer? In our example, lead insurer is Tata. Tata pays central tax, state tax, UT tax, and integrated tax on the entire amount of premium paid by insured. That means on the entire amount of 10 lakhs of insurance premium, if Tata is paying GST, there is no requirement to pay GST again on 4 lakhs by the New India Assurance. So, if Tata is paying GST on entire 10 lakh rupees, there is no requirement that New India Assurance should again pay GST on 4 lakh rupees, because the activity of apportionment of co-insurance premium is neither regarded as supply of goods nor regarded as supply of services, with the condition that the lead insurer should pay GST on the total premium. And what is total premium? Total premium is 10 lakhs. On the entire 10 lakhs, Tata should pay GST. That is the interesting new point which is brought in Schedule 3. Transactions which are neither regarded as supply of goods nor regarded as supply of services. Next point. Services by insurer to reinsurer, for which ceding commission or the insurance commission is deducted from reinsurance premium paid by insurer to reinsurer, subject to the condition that central tax, state tax, UT tax, and IGST is paid by gross reinsurer or reinsurance premium payable by the insurer to reinsurer. What does that mean? Let's say, for example, there is Tata. Let us say there is one person, Mr. X, who is a customer. Let us say there is insurance coverage for 10 crores. And customer is, let us say, is paying premium of 10 lakhs. Is paying premium of 10 lakhs. And what Tata has done is 40% risk is reinsured. 40% risk is reinsured to, let us say, HDFC. 40% risk reinsured to HDFC. That means 4 lakhs premium Tata will pay now to HDFC. Correct or not? This is not a co-insurer, my dear friends. Co-insurance is where 2 or more insurance company combined together. This is a case where one insurance company took the policy, then they are doing reinsurance. Now, who is getting business here? HDFC got business because of Tata. Correct or not? HDFC got business because of Tata. Correct or not, friends? HDFC got business because of Tata. So for that reason, HDFC pays to Tata something called reinsurance commission. Reinsurance commission. Let us say reinsurance commission is 50,000. Law is telling on that 50,000, there is no requirement to pay GST once again, provided HDFC pays GST on entire 4 lakhs. Now see there, services by insurer to reinsurer, for which ceding commission or reinsurance commission is deducted from reinsurance premium paid by insurer to reinsurer, subject to condition that central tax, state tax, UT tax, and IGST is paid by the gross reinsurer on reinsurance premium. That means what? What is the reinsurance premium? 4 lakhs. On the entire 4 lakhs, if HDFC is paying GST, there is no requirement for Tata to pay GST again on 50,000. So one more time I repeat in simple line, my dear friends. If HDFC is paying GST on entire 4 lakh rupees, there is no requirement for Tata to again pay GST on that reinsurance commission of 50,000. So these are the two interesting points which got added in Schedule 3, Section 7(2)(a), which talks about transactions which are neither regarded as supply of goods nor regarded as supply of services. Very interesting concept. Next. Amendments in list of notified services on which tax is payable under reverse charge. We are talking about RCM, my dear friends. See, first point, services by way of sponsorship We know that in case of sponsorship service, RCM will come if recipient is body, corporate, or firm. Now, the amendment, what they have done is RCM provision will come only when supplier is any person other than body, corporate. Supplier is what? Any person other than body, corporate, and recipient is a body, corporate, or firm. Then only RCM provisions will come. Previously also, the concept was same, that recipient should be body, corporate, or firm. Now, the amendment that is done is that RCM provisions will apply only when supplier is any person other than body, corporate. Supplier is what? Any person other than body, corporate, and recipient is body, corporate, or firm. Then only RCM provisions will apply. Next, service by way of renting of any immobile property other than residential dwelling. That means we are talking about renting of commercial property. And we know that for renting of commercial property, RCM will apply if supplier is unregistered person, recipient is registered person. Now, the amendment that has been done is that RCM provisions will apply if supplier is unregistered person and recipient is registered person other than a person who has opted to pay tax under a composition levy. So if recipient is in composition scheme, then RCM provisions will not apply. So let's say, for example, one person, Mr. X, he is an unregistered person. He has done renting of commercial property to one person, Mr. Y, who is a registered person. What law is telling is that if Mr. Y, who is a registered person, is under composition levy, then RCM provisions will not apply. But if Mr. Y, registered person, is paying tax under normal scheme, then definitely RCM provisions will apply. That is the concept we are supposed to note. A very interesting amendment, high possibility that a question may trigger in the examination. Next slide. Clarification whether DDA can be treated as a local authority. DDA, my dear friends, we are talking about the DDA can be treated as local authority. We are talking about Delhi Development Authority, my dear friends. Why this is important? Because for a local authority, we have got some good exemptions in the law. That is the reason why we are talking about this DDA, whether it is local authority or not. DDA stands for Delhi Development Authority. Service supplied by local authority to business entity are taxable under RCM. The issue which arose for consideration is whether DDA can be treated as local authority under GST law. Local authority means an authority which is similar to elected self-governing body such as municipal committee, which is entrusted with control and management of municipal or local fund. So it has been clarified that DDA cannot be treated as local authority as DDA does not meet requirement of local authority as per CGST Act. It should be something like a municipal corporation or municipal committee. And Delhi Development Authority is not a municipal corporation. They are basically for construction of housing project, commercial project, land pooling, land management and all. Next. One interesting amendment. We know that CGST is a tax on supply of all goods or services or both, except alcoholic liquor for human consumption. We know that, right? Now, an interesting new point they brought in that GST does not apply on alcohol liquor for human consumption, and it also does not apply on undenatured extra neutral alcohol. It also does not apply on what, my dear friends? Undenatured. Undenatured means which is not denatured. Denatured means where the raw form is gone. What happens generally is that in this alcohol, they add some chemicals. Once chemical added, it becomes denatured. If it is undenatured, it is pure form of alcohol. Undenatured extra neutral alcohol or rectified spirit used for manufacture of alcohol for human consumption. So on these products also, GST will not apply. So in simple terms, the bottom line answer is that GST will not apply on alcohol liquor for human consumption. GST will also not apply on undenatured extra neutral alcohol or rectified spirit, which is used for manufacture of alcohol liquor for human consumption. I am sure you got the point. Next. Clarification regarding place of supply of online services supplied by supplier of service to unregistered person. Now, in case of online money giving, my dear friends, it is required that supplier is required to mandatory record the name of state of recipient on tax invoice. irrespective of value, my dear friends. And the record in the name of the state shall be deemed to be address of recipient for the purpose of 12(2)(b). Why this is important? Because in section 12(2) general rule, there is one concept which says that if the location of recipient is available in the ordinary course of business, other words, the word used in section 12 exactly is that if address on record exists, place of supply will be location of recipient. If address on record does not exist, place of supply is location of supplier. And in case of online money gaming, if the name of the state is mentioned, that is sufficient. That is deemed to be address. So in case of involving online money gaming, where a taxable service is supplied through an e-commerce operator or a supplier of online information database access retrieval services to a recipient who is unregistered person, a tax invoice shall contain name of the state of recipient, and the same shall be deemed to be address on record. So name of the state is there, that is sufficient, and that is deemed to be address on record. So therefore, in the following case of suppliers to unregistered person, suppliers are mandatorily required to record the name of the state. Which case is online or digital service, order service, online money gaming. So for these services, it is mandatory that name of the state of recipient is required to be mentioned in the invoice. And the name of the state is there, that is deemed to be the address of the recipient. Next, couple of interesting amendments in exemptions topic, my dear friends. We all know this amendment, we all know this point already. We discussed this about supply of service by equipment on meters, transformers, releasing connection, shifting of meters, which are accidentally or incidental or ancillary to supply of transmission or distribution of electricity provided by electricity transmission or distribution utility. Earlier the word used was and, now they changed it to or. Same thing happened in case of National Skill Development Corporation for conducting that vocational training and all. They added one new point where a training partner approved by National Skill Development Corporation. So when a training partner gives training and the training partner is approved by Skill Development Corporation, then the service given by the training partner is also exempt. Fundamentally, in India, we have got Ministry of Skill Development, where the objective is very clear. They want to ensure that they employ the unemployed youth. For that reason, they are actively working. Next, one new exemption is introduced. Service of insurance provided by Motor Vehicle Accident Fund. Services of what? Insurance provided by Motor Vehicle Accident Fund constituted under 164(b) of Motor Vehicles Act against contributions made by insurers out of the premiums for third-party insurance of motor vehicles. So insurance provided by the Motor Vehicle Accident Fund against contribution made by insurer out of the premium paid for third-party insurance. Generally, we take third-party insurance for vehicle. What happens is that, imagine when accident is done, insurance can be claimed by the counterparty also. That's called third-party insurance. Next. Clarification respect to applicability of GST on facility management services to Municipal Corporation of Delhi. So why this concept is there is very clear that whenever we provide service to municipality, that is exempt. If it's a composite supply where the value of the goods is not more than 25% of the value of composite supply, then also it is exempt. So this municipal corporation receives services, housekeeping, maintenance, furniture, everything. Is it exempt or not is the question. The services of facility management such as housekeeping, maintenance, furniture, horticulture agency for upkeep of office are not supplied in relation to performing any function entrusted to a municipality. Thus, it has been clarified that services provided by facility management agency to MCD Delhi headquarters for upkeep of headquarters building at applicable rates, as these services are not covered under exemption. Because to cover an exemption, it must be in relation to function entrusted to a municipality. If it is for maintenance of that office building, then it is not in relation to function entrusted to a municipality, and accordingly this will become taxable. Next slide. Time of supply, section 13(3) is what, my dear friends? Time of supply for services covered under RCM, where we know the concept is very simple: date of payment or date of payment or 61st day from date of invoice, whichever is earlier. That is what we learned. But what will happen in case where invoice is required to be issued by recipient in case of RCM, my dear friends? One small clarification they have given. First one is same, date of payment. Second one is same, 61st day from date of invoice if invoice is required to be issued by supplier. Third point they gave, date of issue of invoice by recipient if invoice is required to be issued by recipient. These 3 dates, whichever is earlier. This is the only new point that they have added. Previously, the answer was date of payment or 61st day from date of invoice, whichever is earlier. But now the concept is date of payment or 61st day from date of invoice if invoice is required to be issued by supplier, or date of invoice if invoice is required to be issued by recipient. These 3, whichever is earlier. Generally, these 3 may not come. Either 1 and 2 will come or 1 and 3 will come, because invoice is not always given by supplier or supplier and recipient both. Any one will give. Correct, right? Exactly. Next. One clarification on availability of ITC in respect of which has been supplied by supplier at his place of business under X works contract. See the issue first. In automobile sector, there is a contract between automobile dealers and the original equipment manufacturer. Is generally an X works contract. X work contract means we will go and pick up the goods. And as the terms of the contract, the goods vehicle passes to dealer at the factory gate itself. That means at the factory gate of manufacturer only the ownership is passed. That's called ex-factory basis. When the goods are over to the transporter, at the instance of the dealer, the delivery on the part of OEM is completed at his factory gate only. The transport may be arranged by the OEM on behalf of dealer, and where insurance is arranged, it may also be done on behalf of dealer. Any claim in case of loss has to be lodged by dealer because the rights and ownership is already passed on to dealer. Issue which arose for consideration was whether ITC can be availed by the dealer only after the vehicles are physically received, or can it be availed when the goods are billed to him and handed over to transporter by OEM at his factory gate. They have clarified that property can be considered to have been passed on by the dealer upon handing over to the transporter at factory gate, meaning thereby they are considered to have been delivered to the registered person at the factory gate itself. And the supply of said goods can be considered to have been fructified. Fructified is completed at the factory gate itself, even though the goods may be physically received by the registered person after the transit period. Accordingly, it is clarified that as per explanation, the registered dealer can be considered to have received the goods at the time of such handing over by the supplier to the transporter at his factory gate. The same principle is applicable in respect of supply of other goods. Other goods also, where the contract between supplier and recipient is X works contract. And as per the terms of the contract, the goods are delivered by supplier to the recipient or to any other person on behalf of recipient at his place of business, and the property stands transferred to the recipient at the time of such handing over. In such cases, goods can be construed to have been received by the said recipient at the time of handing over the goods to recipient or to the transporter. Very, very interesting, because the ownership and the right is passed on at the factory gate itself. Next, tax invoice, credit note, debit note. One interesting amendment which they brought in relation to issuing tax invoice in case of RCM, my dear friends, where supplier is unregistered. We know that if supplier is registered, he will only give invoice. But if supplier is unregistered, recipient should do something called self-invoicing. We know that, no, my dear friends. For that, they notified a time limit now, where they have mentioned that they have introduced one rule called Rule 47A, where they have specified that he shall issue the invoice within 30 days from the date of receipt of supply. Thus, invoice has to be issued within 30 days from the date of receipt of supply of goods or services. So within 30 days from receipt of supply of goods or services, they must issue the invoice. And this story will come only when supplier is unregistered person, recipient is registered person. Then only the concept of self-invoicing will come into picture. Next point, friends. Generation of unique enrollment number, a small point where they brought in following persons are required to generate waybill. Required to generate waybill shall submit the details electronically on the common portal in the prescribed form, and validation so as to unique enrollment number shall be generated and communicated to the said person. Number one, unregistered person making interstate transport of handicraft goods. We know that for him registration is not required, but waybill is mandatory, irrespective of value. Second, unregistered person opting to generate waybill. So in these cases, they have to apply for a unique enrollment number on the common portal. Clear? Done. Next, returns. One new point, GSTR 7. The concept is that filing of nil GSTR 7 is mandatory now. That means every month you should definitely file, whether there is any TDS or there is no TDS. Earlier, only if TDS was there, we used to file. But now for every month you have to file. You can see this slide. Amended point is that GSTR 7 should be mandatorily filed, irrespective of whether any deduction has been made in the said month or not. So every registered person should file GSTR 7, whether there is a TDS or there is no TDS. Every registered person required to deduct tax at source shall furnish return in form GSTR 7 on or before 10th day of the month succeeding calendar month. That's it. Very few amendments, my dear friends. And in fact, that's the end of story. I want to take a short video for you so that you are clear these points and we are very much aware about this. Because the logic of this is very simple, that we get a clarity of thought on this small changes which have come up, and we are very clear with that. Clear, friends? So these are the few extra points applicable for a September 2025 attempt as compared to May 2025. So with this, I'll complete this particular video, my dear friends, and I wish you all the very best. Wish you all success. Do like, share, and subscribe to our channel. And any doubts, we have got IndigoLearn forums. Feel free to write there, comment there. We'll be more than happy to reply to any query. Your success is our success. Thank you very much. Take care. Shiva Teja signing off. Bye-bye. Thank you.